Welcome to HouseLux Estate, your one-stop channel for all things finance and real estate. Today, we're diving into a topic that can cause even the most seasoned taxpayers to break out in a cold sweat: ways to avoid common tax filing errors. We'll go over some simple steps and strategies to help you navigate this tax season with ease and accuracy. From understanding the basics to double-checking your information, choosing the right filing status, and not overlooking deductions and credits. So, are you ready to master the art of error-free tax filing? Let's dive right in. First things first, understanding the basics of tax filing is crucial. It's akin to knowing the rules of the game before you start playing. So what does tax filing involve? At its core, it's the process of submitting information about your income and expenses to the tax authorities. This information is used to calculate how much tax you owe, or in some cases, how much you're due for a refund. Now, why is understanding this process so important? Well, it's simple. By having a solid grasp of the basics, you equip yourself with the knowledge to navigate the tax filing process with confidence and accuracy. It's like having a map when you're exploring a new city. It makes the journey less daunting and more efficient. And let's not forget the potential consequences of making errors when filing taxes. Incorrectly filed taxes can lead to penalties, audits, and even legal trouble. If you think about it, these are complications no one wants to deal with. So it's in your best interest to understand the fundamentals of tax filing and avoid these pitfalls. In essence, comprehending the basics of tax filing is like building a strong foundation for a house. It's the first step in ensuring a smooth and error-free tax filing experience. Now that we've grasped the basics, it's time to delve deeper. One of the simplest ways to avoid errors is to double-check your information. Now, this might sound obvious to some, but you'd be surprised at how many people overlook this critical step. When it comes to tax filing, accuracy is paramount. It's not just about the numbers. Everything from your name to your address, your social security number to your income details, all need to be spot on. A single mistake, no matter how insignificant it may seem, could throw a wrench in your tax filing process. Let's start with the basics: your personal information. It's essential to ensure that your name is spelled correctly, your address is up to date, and your social security number is accurate. If any of these details are incorrect, it may lead to confusion or even rejection of your tax return. Now, on to your income details. This is a crucial part of your tax filing, and it's equally important to double-check these figures. This includes not just your salary, but also any additional income you might have, such as dividends, interest, or rental income. The accuracy of your income details directly impacts the calculation of your tax liability. So if you underreport, you might end up owing more taxes. And if you overreport, you could miss out on a potential refund. It's also important to verify the details of your deductions and credits. These can significantly reduce your tax liability, so you want to make sure you're claiming everything you're entitled to. Double-checking might seem like a chore, but it's an investment in your peace of mind. You don't want to be stressing over an audit notice or a delayed refund because of a simple typo, do you? So, take that extra time, go through your tax return one more time, and make sure everything is as it should be. It's a small step, but it's a significant one towards error-free tax filing. Remember, a simple typo could lead to a whole lot of trouble. So let's keep things trouble-free, shall we? Choosing the right filing status is another common area where errors can occur. Now let's unravel the intricacies of filing statuses. There are 5 main ones recognized by the IRS: single, married filing jointly, married filing separately, head of household, and qualifying widow or widower with dependent child. It's crucial to understand each, as they can significantly impact the amount of tax you owe or the size of your refund. Starting with single, this is pretty straightforward. If you're unmarried, divorced, or legally separated, you fall under this category. Next, we have married filing jointly. As the name suggests, this applies to married couples who choose to file a single tax return together. It often results in less tax owed compared to filing separately. Then there's married filing separately. Some couples prefer to keep their finances separate, or it may be beneficial tax-wise in certain situations. It allows each spouse to be solely responsible for their own tax. The head of household status is for unmarried individuals who pay more than half the cost of keeping up a home for themselves and a qualifying person. This status generally offers more favorable tax rates and a higher standard deduction. Lastly, the qualifying widow or widower with dependent child status allows individuals who have lost their spouse to continue using the same joint return tax rates and the highest standard deduction amount for 2 years after their spouse's death. Now, why does choosing the right filing status matter? Well, each status has different tax rates and standard deductions. Selecting the wrong one could lead to you paying more tax than necessary or even facing penalties for underpayment. Consider this. If you're a single parent and mistakenly file as single instead of head of household, you could miss out on a higher standard deduction and lower tax rates. So it's not just about avoiding errors, it's also about ensuring you're not leaving money on the table. Do your research, consult a tax professional if needed, and make sure you choose the status that best suits your circumstances. Choosing the right filing status is not just about avoiding errors, but also about maximizing your tax benefits. You'd be surprised at the number of people who overlook deductions and credits. This is a common pitfall that can leave a lot of money on the table. The tax code is vast and complex, and it's easy to miss some of the opportunities it offers to reduce your tax liability. Let's take a moment to unpack this. Deductions and credits are basically the tax code's way of giving you a break. Deductions lower your taxable income, which in turn reduces the amount of tax you owe, while credits are a dollar-for-dollar reduction in your tax bill. So, what are some of the common deductions and credits that people often overlook? Well, there are quite a few. The student loan interest deduction is a big one. If you're paying off student loans, you may be able to deduct the interest you've paid over the year. Another often overlooked deduction is the home office deduction. If you use part of your home exclusively for your work, you might be eligible for this deduction. Now, let's talk about credits. The Earned Income Tax Credit is a significant one that many people miss. It's designed to help low to moderate income working individuals and couples, particularly those with children. The Child and Dependent Care Credit is another credit that's often overlooked. If you're paying for childcare or care for a dependent so you can work or look for work, you might be eligible for this credit. But remember, to claim these deductions and credits, you need to keep track of your expenses. Keep your receipts, make notes of your spending, and use a system that works for you to stay organized. This will make the process of claiming deductions and credits much smoother when tax time rolls around. And don't be afraid to get professional help. A tax professional can help you navigate the complexities of the tax code and ensure you're not leaving any money on the table. Remember, every dollar counts when it comes to deductions and credits, so make sure you're not overlooking these opportunities to reduce your tax bill. And there you have it, simple steps to avoid common tax filing errors. Let's take a moment to recap what we've covered today. Firstly, we delved into the importance of understanding the basics. Taxes may seem daunting, but with a solid grasp of the fundamentals, you'll be well on your way to filing your taxes accurately and efficiently. Remember, it's crucial to know your tax bracket, understand your income sources, and familiarize yourself with the standard tax forms. Next, we emphasize the need to double-check your information. Tax forms require precise details, and even the smallest error can lead to complications. So always verify your social security numbers, income reports, and other critical data. We then explored the significance of choosing the right filing status. Your status, whether you're single, married filing jointly, or head of household, impacts your tax obligations. Always ensure that you've selected the appropriate status to avoid any discrepancies. Lastly, we discussed the importance of not overlooking deductions and credits. These can significantly reduce your tax bill, so make sure to take full advantage of them. From student loan interest to energy-efficient home improvements, there are numerous deductions and credits available. Remember, the goal isn't just to file your taxes, but to do so correctly, without errors. Each of these steps is a tool that can help you achieve error-free tax filing, saving you time and potential headaches in the long run. And remember, tax filing may seem complex, but with the right knowledge, it's a manageable task. So don't be daunted, be informed. We hope this video has been helpful in guiding you through the process of tax filing. If you have any questions or need further clarification on any point, don't hesitate to leave a comment below. Thanks for watching. Don't forget to subscribe to HouseLux Estate for more financial tips and tricks. Here's to error-free tax filing.